Hey everyone, it's Evan here from the Trade Risk on Friday, January 26th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So here we are again, stocks at new highs. Once again, we had healthcare and biotech really emerging this week, expanding to the upside, helping fuel this latest leg higher in the market. We have the S&P 500, which is actually closing above its weekly 2 and 20 standard Bollinger Band. That doesn't happen all that often. We're going to talk about that, look at some past occurrences, and we have a very busy week of earnings next week. We have over 500 companies reporting, and we have some of the big names, the real influential, generally tech-heavy companies, Facebook, Microsoft, Amazon, Apple, Alibaba, to name a few, all reporting guidance next week. So we're going to talk about a couple of scenarios heading into next week. So all of that and some more right now. All right, let's jump in here with the S&P 500, the SPY ETF, and you can see this is a daily chart. I got Bollinger Bands on my chart this week just to show you a couple of context here, or a little bit of context on this weekly chart. This is the daily. You can see aggressively expanding to the upside, these Bollinger Bands, and you can see we're just extending to new highs here. We'll take a look at that daily chart in just a moment, but it's the weekly I want to at least focus on initially here, and you can see same thing with these Bollinger Bands, standard bands, 2 and 20, and you can see we are actually got about 60% or so of this week's body outside above the upper envelope here, the upper end of this Bollinger Band, and that doesn't happen often. Traditionally, what we see even in strong uptrends is that on a weekly chart, we tend to ride generally right at or right below, but still contained within the upper Bollinger Band, and you can see again we're starting to push outside of it. So really, when we take a look at some of these past occurrences, we did have a little bit, a couple of weeks over here back in September of last year, which led to some consolidation as we started to poke our heads out above that band. But really, I would say that, this one would be back here in December of 2016. Let me zoom in just a bit so you can get a better look at it. This type of expansion above, you can see we did get above it, and then the very next week we saw this reversal. We checked back, consolidated, and then kind of continued on our merry way at a more sort of sustainable slope, if you will, to the upside. If we start to go back a little bit further, you can see we had this brief period here, just basically one or 2 weeks where we pushed above it, checked back, it led to a consolidation and then a larger pullback. So if we scroll back some more, you can see doesn't happen all that often. This was back in 2015 where there was some more downside volatility. Again, back in 2014 now, you can see a brief push above it, led to a digestion week, then some sideways, and then, a consolidation to sort of ensue afterwards. So this event here, while clearly does not guarantee that next week has to be a pullback or it has to be a consolidation. But again, it just helps us frame out this market and understand some context. If you are putting on new exposure right here, understanding that we have covered a lot of ground, 97, or I don't know the exact percentage, but I'm sure 95+% of time is spent contained within these Bollinger Bands here, particularly this week where we're this extended outside of it on the weekly, gives you some pause or at least some awareness that if you're putting on new exposure here, you understand that we've covered quite a bit of ground. Again, it's going to be very much strategy and time frame dependent. It's not a suggestion to not buy or to buy. It's just context for you to hopefully make some more informed decisions based on your own strategy and process. So that's, I think, all I really wanted to say on Bollinger Bands there, particularly on the weekly chart. If we look at the daily here, you can see it's still just aggressively rising to the upside. We're contained above it. And I think this week's action was pretty interesting. So if we just drop those off the chart to clean it up a little bit, and we go back to our standard view here, I think this week's action was pretty interesting. And we had these 2 days right here, and it's almost laughable that this almost seems like a meaningful consolidation here, but I feel like and again, the sample size is very small and subjective, but questions or emails that I receive, particularly on these 2 days, about either the pullback starting or people interested in kind of, this is the top, people really sort of just one foot out the door wanting to exit or hedge or protect in this market is really remarkable. And I think it speaks to a lot of what we're seeing here is this melt up of most people, and understandably so, are realizing that there are risks as we continue to sort of accelerate to the upside. I think it totally is justified. I myself have dialed back exposure, so I'm still long, but much less than an aggressive position of long. And but I think it's that psychology, it's that behavior that even here, just this 2-day shakeout where intraday we came, kind of slamming down into this, 3 or 4 point SPY sell-off back to back, but it led to this pop higher when we got no follow through to this move where the sellers just really kind of dried up. There was no follow-up pressure here, and the market continued higher, and we're making new momentum highs, and this continues to accelerate. And once again, it will end at some point, and I think no one knows when that point is, but as long as you're managing risk responsibly, you're being selective with new exposure, you're letting existing positions ride, you're controlling position size, that's the name of the game. That's what we all do as traders, is we manage risk and continue to adapt to changing markets, or in this case, persisting markets, right? Because the analysis this week, for me anyway, is basically the same as it was back here and back here. Markets are, getting extended, but the momentum is strong, the trend is strong, breadth is still holding up. So, this state of the market, staying overbought and really in this strong markup phase has been here for the past several weeks, and it might be here for several more weeks. So again, I think we just need to, we sort of need to appreciate it, but stay adaptive and not get caught flat-footed. So with that rant sort of aside here, I'd still be paying attention to this trend line. So again, we looked at this as sort of the hourly, an hourly chart last week, and we basically, kind of connected the dots here from the start of this year going all the way up to current price action. And you can see we basically tested it. We tested this trend line. And again, you can refine this and draw it however you like. I don't aim to be precise with this, just showing you the general guidance here. But we more or less tested this area this week. It held, and so far we've kind of pushed higher above it. So I would just continue to sort of extrapolate this out and pay attention to that as a early warning sign or a very near-term sort of change of character for the market. That's something I would be paying attention to next week. Also for next week, I sort of, one of the things I was mentioning to subscribers this week was this notion of next week being a very busy week of earnings with some pretty important companies that will be releasing guidance, and we'll be getting the reactions to some of these big tech companies that have had nice run-ups. How does the market react to them? Do we actually see a period of a sell the news on some of these stocks, or is it all just going to be an acceleration higher? So far, earnings season has been good. Companies, generally speaking, have been beating and raising, and markets have been responding favorably, as you can see here with this nice melt up that we're currently in the middle of. So do we get more of that from some of these high sort of impact companies? That's something that we'll be paying attention to next week. And the thought process being is, perhaps we don't get any meaningful, pullback or sell-off until we get through the bulk of those earnings to really see how the market feels on some of that latest data. Again, price action trumps all, but that's something to think about heading into that event. If we start to really accelerate from here even further, which I know sounds crazy, but if we do continue to just power higher here, then we can start to think about that concept of a blow off top that we mentioned in last week's video. You can watch last Friday's video, kind of went into detail there if you're not sure what we're talking about. So that's the market overall. I think we got our levels, we understand the sort of psychology behind the market, and we kind of framed it out. We looked at the Bollinger Bands, and we really know what's going on. So The Russell 2000, again, I think now this is something to start to pay attention to here. This could give us some more clues again, just like we can use that slope and that trend line there from the start of the year to the current prices and measure to see when the SPY starts to test it again or break below it. We can also pay attention to the Russell 2000 because it is, notably underperforming here. Again, structurally, when I look at this chart, there is nothing inherently wrong here. This is a bull trend. You can see we are still heading up and to the right. We're above all the fast-moving averages, but it's a little bit of a slower pace here, right? We have the S&P 500, we have the NASDAQ, which is screaming higher with a MACD that's just hitting, record highs, whereas the Russell 2000 is still, momentum is it's fine, it's positive, it's bullish, but it's not exactly the most convincing index here as it starts to take its time. That can change, rotation happens, but I think this is an important area to pay attention to. If you are, really trying to play defense here, watch the Russell 2000. If it's underperforming now, it might be the first to roll back over. If it actually starts to violate some support, I would say at least 158 right now, start closing below the past several day lows. And then the highs here from the 16th, I would say about 158, 158.50 or so right in here would be a very important sort of near-term level to pay attention to. So if out of the gate next week we start losing it, that would not bode well for the market. But again, I would not be putting on a bet at this point. I would not be trying to aggressively fight this at this time. Don't think the overall structure of the market environment supports trying to get aggressive and front running this. But again, it certainly does come down to your strategy, but something to pay attention to there for the Russell. NASDAQ, not much else to say about it. Very similar to the S&P 500, just screaming higher here. New momentum highs, new all-time highs here. Extended away from the moving averages, but bulls are just dominating here as far as momentum goes. So that's the market environment. Let's start to get into some other stuff. We'll go to TLT first. Go to the weekly chart. You can see it did hold on. It did not get that follow through lower. We had a pretty ugly week last week. We closed down a little over 1%, but at the lows of the year, coming back into this very important level we've talked about many times now, this 123, and so far the bulls have held onto it yet again. We've tested this time and time again, going back the past 6 to 12 months. We're still holding above it. Bulls still have plenty of, they have the work cut out for them here. They have to really sort of defend this and turn these moving averages around and base out and support the market here. But so far, we're not breaking down. I'd be paying attention to 123, get a high volume breakdown below that. It's probably good for some follow through. So if you're looking to, you could look at TBT, or you could look at TMF. Nope, I'm sorry, TMV. TMV is the 3x. 3x bearish TLT. So you could look at that if you want to play a potential breakdown there. If you think the TLT is going to start crashing below here and really start selling off, take a look at that leveraged instrument. Position size accordingly, of course. What else? Commodities. Go to gold next. You can see, if we go to the weekly chart, still had a nice constructive week, 1.31%. It had this little inside kind of slight consolidation last week, and that's all it took. Bulls back in control, popped us higher. Had some volatility on Thursday as the dollar started to find, this high volume reversal. That could put some pressure on commodities. Finally, for the first time in many weeks, if we start to actually see the dollar start to stabilize here. Very high volume reversal, so it's something to pay attention to. We just had an inside day here on Friday, so that'll be an interesting dynamic as commodities have really been in the strong uptrends almost across the board. Certainly the metals and oil and natural gas. So GLD, again, you could see above bullish trend. Don't see much of a setup here, but bulls are very much in control. So dips seem to be buyable right now, and until proven otherwise, bulls are in control. If we go to silver, I like the, I was talking about this setup here above 16.25. We had that nice follow through gap up 3% to the upside. Then we suddenly came back down and almost filled this in the actual ETF, in the ETF anyway. And Friday we closed just marginally positive, so we got an inside session here. Paying attention to silver, I'd like to see this just kind of settle out. If I can see volatility start to shrink a little bit, stabilize, hold above this breakout area, the 1630 level. Be interested in a potential long opportunity next week, so I'm paying attention to that pretty closely in silver. If we go to USO next, you can see closing at new highs. Bulls are in control. High volume coming in on the day. Natural gas also continuing higher. Got some tails that are just stacking up here, not closing at the highs of the session, but every day we seem to be progressing a little bit more to the upside. We're starting to really get into the thick of this supply in here, so it's interesting to see how much we can chew through here, and if we continue, it'd certainly be a remarkable V-shape from these lows that we made late last year. So bulls in control, but I would not be an interested chaser at these levels. So I think that's everything. Let's take a look now at some sectors. A lot of stuff is working. So XLV, I think, is a standout, 2% to the upside, really extending here on Friday. Take a look at this chart. Again, look at that MACD, really just hitting nosebleed territories, especially for something like an XLV. So this really on fire, helping fuel the market here late in the week. Biotech specifically, even on the week, 5.4% to the upside in the IBB. Or if we look at the XBI, up over 8% and clearing the highs here from 2015. So lots of excitement here for healthcare biotech. A lot of names getting some love this week. That's helping prop up the market. XLP. So even XLP here, the staples, which have been kind of consolidating for most of this week here, near highs, starting to rally back up. And if we look at this weekly chart, you can see getting extended here as well for the staples, but looking real strong, helping push this market to the upside. And XLY, which has really been a strong one ever since, really, if we go to the weekly chart, this is it, the end of right around November or so, when we broke above this $93, this 5 or so month sideways range, we've really just picked up steam and accelerated here. And then just take a look at these recent bars. The size of the range that we've been covering to the upside has been pretty remarkable. The one sort of downside, I mean, even XLU is starting to recover a little bit today. It's been really beaten up. We talked about it the past couple of weeks. You can see some good volume coming in, made some strides to get some recovery to the upside. Still looks like it's in a tough spot, right? Technically, it did suffer a lot of damage over the past several weeks, but maybe some mean reversion there in the short term. And it would really be the IYT, which saw the most underperformance today, down almost 2% on the week. You can see on the weekly chart, still, again, perspective and time frame matters so much because there's no technical damage here whatsoever. But on a relative basis, it did underperform on the week. If we go back down to that daily chart, you can see it's trying to hold on to the 20-period EMA. So something to let settle in, but given such a strong, dominant weekly chart, something that you know, we probably want to be, you know, looking at as opportunity for weakness rather than selling, you know, aggressively on this pullback. So I think that's everything. That's everything I had for today. So thank you so much for tuning in and watching. If you like the videos, do subscribe to our channel. Have a great weekend and talk to you on Tuesday.